So today I'll be giving my weekly review and also my projection for the coming week. So if you're first time viewing this channel or first time watching my video, do well to subscribe and stick to the end of this video, guys. So I'll give a short review of what we did last week. So last week we were expecting the market to come to this zone from here. This is where the market started last week. So we expected the market to push to sweep this high right here because it's a liquidity. Let me make it bigger. It's a liquidity zone, so we're expecting the market to come to that zone to sweep that liquidity before heading to the downside. But the market just kept pushing down. Just like I said, the market can still keep pushing down. The market knows best. We're not the one controlling the market. We are the one following the market. We're a follower. None of us have the money or say the liquidity to push the market. Some people might have, for me I would say I don't have. So I'm just saying for myself, I'm not the one pushing the market, and most of us, or 80% of us in the market, are not the one pushing the market. Very few people are the one pushing this market, so we should be smart about it. You have to be smart about it, guys. So just like we said, we're expecting a sell, but on Friday the market eventually came to a zone and even end up creating this liquidity zone right here, which the market came to sweep. And it's a good thing when you see a sweep of liquidity and we want to see a shift. We are anticipating a shift before the market begins to trend to the downside. So let us clear the charts. So we'll do our top analysis, then we'll go to the COT data, what they are doing. So we'll keep track on what the institutional traders are doing. So let's do a top analysis from our weekly, clear the charts, to our 1 hour. So on the weekly time frame, let's just map out our zones. Let's map out the zones that are relevant. So we have this wonderful zone right here. This is a very nice zone, which since the market broke it to the downside, we have been trending aggressively to the downside. After I came to retest, the market has been pushing aggressively, which is very nice. And we now have this support right here, which the market is currently at and it's reacting to, and buyers are coming in, buyers are stepping in, guys. As you can see, buyers are really stepping in after the market printed this evening star right here. On the norm, we should see a push, then a very strong massive push from the sellers, but buyers are just resisting that move. Buyers are resisting that move, telling us the institutional traders are adding long positions. So let's drop down to the daily time frame. What I was seeing on the daily time frame. So on the daily time frame, we can see that the market is pretty still on a downtrend, because I will not call this a shift. The last low we have was this low right here, and the last high we have was this high right here, which I would say this is a sweep of liquidity. It's not a close, but if you put it on a line chart, it looks like a change of character. So we're not 100% sure that's a change of character for now. We'll see what the institutional traders are trying to do first before we can say, okay, this actually broke structure. For me, I'll call that a sweep of liquidity. And also, if you put it on the line charts, we'll see that this is an expanding triangle. Let me plot it. That's been on like an expanding triangle right here, just like we see here. It has been expanding. So see, so the markets could give us something like this before heading to the downside. Then before we get that shift, then head to the downside. This is something that could happen. It's one of the possibilities. We're not the one creating the move, we are following. We are still on the downtrend. But putting on the line chart, we are still on the downtrend. Because of, I'll say this is the recent or the last lower high the market printed. So let's go back to our candle. So on the 4 hour, what are we seeing? Let's mark up the zones we want to use for. Okay, we have this wonderful zone right here. We have this zone. This is a beautiful zone, which the market might even come to that zone, but we should just wait to see what the market wants to give us. Patience is, for me, I'll not say the best, is a strategy for trading. If you don't really have patience, believe me, even though you have a very good strategy, you will still be having issues with trading. You have to be very patient with trading. So on the 4 hour, we are like in a range, and I can see spots this trend line right here telling us there's a decrease in momentum, right? There's a decrease in momentum from the buyers, though the buyers have been pushing, but they are not been able to create a higher high, right? And you can also see this trend line from here telling us that sellers have been pushing, but that zone right there, buyers have been coming back to the charts. So what is this thing telling us? That buyers are here, but sellers have been hitting this zone really hard, and we will get a very nice break. Markets we'll get a very nice break from here, then we continue down. This is very possible to happen, and also we could get something like this. It's also possible. The market does what it wants. We just react to what the market is doing. So let's go over to the COT data. Let's see what the institutional traders are doing. So on the COT data, what are we seeing? Okay, on the COT data, what are we seeing, guys? Let's put the pen. Okay, we can see that we have more of long position on the JPY, making JPY strong. That's making sellers strong in the USDJPY. That's why we have a downtrend recently, and we have very little short position, making the JPY also strong. And recently they've been adding a lot of short position and closing their long position, and this is telling us kind of buyers are stepping in on the USDJPY, making the JPY a little bit weak. So we're either the markets from next week, we see the institutional traders starting to closing their short position on JPY, making JPY strong and opening long position to tell us, okay, they want to continue the downtrend properly. So let's go back to the chart. So on the charts, the institutional reports have really tell us or giving us an idea of what is happening. Overall, we're on a downtrend. That's why we have a lot of long position on the JPY, making the JPY strong to give us this downtrend, right? And we have been seeing institutional opening short position or long positions, which are this long position you can see here, a lot of long position, but we can still see that these long positions are getting weak, right? It was not how they pushed the market here, was the way they pushed it here, though the sellers are also shoppy, but see here they managed to cover a lot of ground, right? Still put it in your mind that the buyers can still, the institutional traders can still add more short position, complete reversal on the JPY. So let's just go to the 1 hour to see where we have our best entry zone. So on the 1 hour, what are we seeing? Exactly what we said last week. I'm still holding my trade. The market triggered us because we're expecting the market to come to this zone right here. We're expecting the market to come to this wonderful zone right here, a beautiful zone. Before we head to the downside, we have this fair value gap, this zone right here. This was the zone we marked out, and the market just came to that zone on Friday. So we are still holding the trade. So once we get a shift, the market shifts, as the market has created a very little high on the lower time frame. We already have our point of change of character right here. So we need to see a candle close. For me, if I want to say a change of character, or I want to identify my change of character, the candle should close below that zone, and another candle should open and close below that zone. That's how I spot my change of character. If a candle does not open and close below or above the zone, for me I would say it's a sweep of liquidity. So this is what I'm expecting. A candle should close, or 2 or 3 candles should close below that zone. Then any pullback I get, either to a fair value gap, another block, a supply zone, then that will be my entry to add up more position to go to the downside. So this is what I'm expecting the market to give me for this coming. So I'm going for a short. I'm already on a short trade, so I'm going for shorts. The moment I see the markets give us that shift, I'll be going in for more short position. 1:3. I love 1:3 trades. Plays out all the time, literally all the time. It plays out very, very well. So I'll be expecting the market to come to this zone first as my TP1. Market will come sweep this liquidity as my TP1. Then here will be my TP2. This will be my TP2. So this is what I'm expecting the market to give me for this coming week. So if you find the video helpful, do it, give it a thumbs up. And also, if you have not yet subscribed, do it to subscribe and smash that notification icon. So whenever I drop a nice content like this, you will be the first person to get the video. So when next we meet again, I wish you guys a happy trading and peace.